And apparently GameStop and AMC shares, stock prices, they skyrocketed again in the first time in 3 years, all because this guy or this person, Roaring Kitty, came back online, and I guess he posted a meme again of GameStop, and everybody went and invested and bought up this stocks. Hola, hola, welcome. I am Violeta, a first generation real estate investor, entrepreneur, and host of the MoneyChisme podcast, where I talk about personal finance, entrepreneurship, and, general real estate investing. So if any of that interests you, then make sure you like and subscribe. This week, I just want to go online and kind of see what's been going on in the news in the finance world. So basically, I'm just going to go on here and look up what's been going on. And I have a few articles pulled up that I will link down in the description in the show notes in case you're curious. But of course, I'm a real estate investor, so I am curious about the interest rates. So the first article that I have pulled up is from USA Today, that I pulled from Yahoo Finance. And the headline reads, "The Fed just dashed hopes for lower mortgage rates," and not looking good with these home interest rates. So at the moment, mortgage rates for a 30-year fixed loan is above 7.55%, which is a little bit down from the 8% in October. But it's definitely way above what these initial predictions were. So for example, back in February, Fannie Mae forecasted that the 30-year fixed rate mortgage was going to be 5.9%, but now they're saying by the end of the year it might be at 6.4%. Same thing with the Mortgage Bankers Association. They're at the same with 6.4 for the year end, but initially in January they said it would be 6.1. The National Association of Realtors, they believe 7.1 this spring, which is true because it's way above, and then 6.5 by the end of the year, but they initially predicted 6.3. Wells Fargo initially thought it would be 6.05, but it looks like all of them are kind of similar in saying that we're going to be above 6.5 for by the end of the year. So it doesn't look like it's going to drop below that. So if you're thinking of buying, it looks like you're going to be around the 7% range anyways. Especially as we're coming around to the hot season, which is the summertime, because everyone wants to move during the summertime before the kids start school, and it's the perfect time to move. So everyone's shopping around for homes, and although there's a low inventory, you would think that interest rates are high enough to reduce buyers. It really is not, because at the end of the day, people need to move on, right? They need to live. They need to go somewhere and find somewhere to live. I'm already seeing it even here by my house. Houses are starting to fly off again. They're closing within 2 weeks. Like, they're being sold within 2 weeks of being listed. It was slow at the beginning, I will say. And even at the end of last year, homes were slightly lower, but now the prices are increasing again. And again, I'm not an expert. I'm not a real estate agent or anything, but it is important to kind of keep up to date with these and just get an idea of what you can expect, especially me as a real estate investor that is planning to buy another investment property this year. I have an idea of what I should be looking at. So when I start looking and I start doing my deal analysis, I should be assuming that I will get above 7%, because I'm always going to go for the worst case scenario. So these are to help me plan. And same with somebody that's trying just to buy their first home, plan for these. If it does drop, then yay. But if not, then, plan for the interest rates to be that high. So with the high mortgage interest rates increasing and not planning to really take a big dip too much by the end of the year, that brings me to what about the sales prices in the housing market? Because you kept hearing about the bubble and the housing market bubble and all that, but what is the forecast? And this next article is from Forbes, and it's the housing market predictions for 2024. And it did talk about how in the spring, because of the high mortgage rates, home buying wasn't that big. And I did see it here during the springtime earlier this year. I did see some houses kind of sit a little bit longer than usual and selling a little bit less. And even when I get I get this little notification of how much my house is worth. And at the beginning of the year, it had, they expected less. It still obviously was going up, but it was less than what you would have thought with the way things were going. And so in the springtime, it was kind of slow. Houses were slower to sell, and it was easier to negotiate, I guess. And there was still a 6.4% gain in February. So here, according to Forbes, the U.S. home prices, they still had a 6.4 annual gain in February. And so home prices were still at or near the all-time high. I'm starting to see them to go under contract within 2 weeks, 2 to 3 weeks. So people are out here buying. Unfortunately, the only real thing that's really going to help is having more homes available, more inventory. And unfortunately, we can't keep up at the moment. So it's going to stay until, something else happens that pushes everything back down. And with these interest rates going back down below 5% would be nice. But again, with the other article, it's not looking like it's going to happen this year. So if you're looking to buy or thinking about it or wanting to, you're going to have to plan for this. Now, this next article is by Bigger Pockets. It is the U.S. immigration crisis, what it really means for housing markets and investors. And I thought this was a pretty good read. I read it, and it gave me a lot of insight that I didn't even consider as a real estate investor. When I'm doing the analysis for the deals, it never occurs to me to look at immigration trends or anything like that. And in this article, it talked a little bit about that, to take that into account. But it really was an article talking about how immigration actually has a pretty positive impact in housing markets. So in the article, she mentions how there's an estimated 5.4 trillion in housing wealth that immigrant households hold. So the article also mentions when immigrants move into a community, obviously the demand for housing goes up, which, is something that we need to consider as real estate investors. If you are keeping track of some immigration trends, when you're hearing it in the news that we have an influx of immigration, you can see and look where are they heading and start, investing in those areas, because the need for housing is going to go up. And in these areas, that increases the economic activity. More people, they're buying more and all that. So it has a lot of benefit because they're buying more goods and services. And as a result, sometimes how home values rise. Some people think it's the opposite. And as a real estate investor, this is a great opportunity to do if you're investing in multifamily housing or little small apartments like that, because that need is going to increase. And then there's this thing she talks about how generally housing, more housing wealth generally means less affordability for would-be homeowners. But actually immigration ends up stabilizing areas that are declining. And she did mention one example, which is how they prevented the decline, the population decline in Chicago and the surrounding Cook County, which has kept those housing prices stable. So Chicago was struggling at one point, but due to immigration, market has actually stabilized because of immigration and people stabilizing that market. And on top of that, they, bring up back the community. The community was struggling and they come back and they create a community, and it benefits in the long run. So this article was a good read. It has a lot of data studies that the article references. So if you're interested, definitely read this one. I'm not going to get too much into it because it goes a little bit into some of the politics of immigration, which is still a good read. But really, if you're a real estate investor, this is something that you have to consider. And now I'm glad I came across this article, because now that's something that I am going to start looking at. And so since we are on the topic of controversial topics, the next article is by Finbold, and it is the Starbucks stock falls to a 4-year low as the boycott rages on. And this is one that I'm participating in. I do not, for several reasons, really stemmed initially from the union, anti-union tactics that they have, and on top of the Palestinians. But apparently they had a 4-year low in their stock, because apparently, due to this boycott. Now, the boycotts have been happening from last that I heard, from when I came about it, was October of last year. And, initially they were saying the boycott didn't work and blah, 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 because it didn't really affect, I believe, their fourth quarter of last year. But it started gaining traction, and it looks like this quarter, it actually is starting to show the effects of the actual boycott, because it's saying that there was a drop in 6% of sales. So it says, according to Starbucks CFO Rachel Ruggieri, the second quarter of international sales was impacted by issues in the Middle East, and other comparable stores' sales abroad dropped by 6%. In North America, sales declined by 3%. And it's all due to, the boycott, because of what's going on in the Middle East and Starbucks involvement. And so now the stocks have dropped, and it's getting an effect. Here, the analyst, does highlight that the social media discussions about Starbucks' stance on the Middle East could be a critical factor for the sluggish sales. So, for those that say that boycotts don't work, here's some proof, and it looks like it's starting to have an actual impact. We'll see next quarter, so we'll see what happens. But I thought that was kind of interesting. And for the final article is kind of like a funny one because it brings back the times of 2020 where we had these meme stocks. And apparently this guy, Roaring Kitty or something like that, who I guess got started on Reddit. So this is on, where's this? CNN. Again, I'll have it linked. And apparently GameStop and AMC shares, stock prices, they skyrocketed again in the first time in 3 years, all because this guy or this person, Roaring Kitty, came back online, and I guess he posted a meme again of GameStop, and everybody went and invested and bought up this stock. So for shiggles, let's go look at the GameStop stock. And I just pulled up the 5-day recent ones. And you could see May 8th and May 9th. And I think, May 10th, it kind of had like a little bit of a little hike. It went up to $19.60. For the stock price. And then I guess, Roaring Kitty came back, and apparently he posted a meme again, and it shot up to $30.45. And so it shot up up to $30. And then right now at this moment, it is a little bit down, but it's crazy to see the impact of just a famous person that can manipulate the shares price. So let's look at AMC stock price, right? And see how that one doesn't look like it went too high up like GameStop did. Well, actually it did. I wasn't looking at the 5-day. I was looking at the 1-day for some reason. So it initially was at $3.21. And then today it has skyrocketed to $5.23, which may not look like a lot. But that is a 58% increase in the past 5 days. It just shot up. And so pretty crazy to see that somebody could have such a big impact in stock prices just by posting a meme. And so just wanted to end this video with that craziness. So is he coming back to mess with the stock market again? We'll see what happens. I'm gonna keep an eye on it. That was pretty crazy, and just brings me back to 2020 when Dogecoin was a thing and all that stuff. So other than that, hopefully you enjoyed this episode of me just going online and searching up what's been going on lately in the finance world. Hopefully I'll do these, maybe monthly or something like that, because it was actually fun just to kind of like chit chat and see what's been going on. But other than that, I will see you in the next episode. Bye.